You're going to want to check this out. 10 financial principles you won't learn in school. An excellent education is essential for reaching one's goals. It's possible that you wouldn't be able to name a single thing related to personal finance that you learned in school if I asked. The reason for this is that the topic is seldom covered in classrooms. The common belief is that if we just go earn a degree and land a job, everything will be fine. But it's not quite that easy for everyone. If you want to make it in the real world, you'll need to learn a lot more about finance than you would in a traditional classroom. However, many of us lack basic knowledge when it comes to finances, which is why a lot of people are struggling financially. Successful people have a solid financial foundations. They put in the effort to know everything about finances. Before we continue, if you want to make some quick cash, then you can click on the link in the description of this video. You can make some money fast with no experience required. Alright, let's get back to it. In this video, we will talk about the different financial principles your schools probably didn't teach you. To save you the hassle of figuring things out the hard way, we've produced a list of the 10 financial principles that everyone should follow if you want to be successful with your own finances. Before we get started, don't forget to subscribe to our channel and turn on notifications to learn more about wealth and get updates on our content. Alright, let's start with Number 10. Student loan is not a must. Most of us who are financially disadvantaged believe that taking out a student loan is our only option if we want to go to college. When you do this, you add stress to your life since you'll have more debt to pay off than you can handle as a college student. Without a regular paycheck, paying off that debt will become an urgent priority, so you'll need to get employed as quickly as possible. But there are other ways to get the degree that you want. Some schools provide excellent education at no cost, while others charge just a fraction of what private schools do. You might also start your education in a community college, work while you study, or attend a less expensive institution to get your degree quickly. It's possible that not everyone can benefit from this since pursuing a high-paying profession requires financial investment. You don't have to take a student loan to get a degree. You can experiment with the options provided and choose the one that works best for you. Number 9. Fundamentals of budgeting. If you've watched our previous videos, you won't be shocked to find budgeting on this list as we've previously covered it in a couple of our videos. Just think of how crucial a budget is. Do you recall learning how to create a financial plan in school? No, I don't think it was even discussed, unless you enrolled in a financial class. If you don't learn the fundamentals of budgeting at university, you may be at a disadvantage as soon as you graduate, particularly if you're planning to live independently. If you don't learn how to budget your money and tell the difference between necessities and desires, you're setting yourself up for a life of misery. It is important for everyone to learn how to budget for a comfortable life funded by their own hard-earned money. Having a firm grasp on how to budget for all of one's monthly expenses while setting aside money for things like food and savings is an essential part of budgeting. If you want to save time and effort, the best option for you is tactical budgeting, in which you make plans and budgets for a long period of time. You may establish a budget for the next 6 months in one sitting by simply making a list of your monthly expenses and purchases. It's important to keep your monthly budget separated from your spending money. Budgeting doesn't mean you need to stop spending for things that you want, so don't be afraid to try. It might do magic from your current financial situation. Number 8. Saving money. People are taught about savings, but they don't emphasize its importance and how to do it properly. The standard recommendation is that students, after landing a job, set aside 10% of their salary in savings. Even if there is a saying that small amounts of cash build up to a huge amount, well, this isn't the case if your goal is to be financially secure in the future. Frankly speaking, this isn't enough source of income when you decide to retire. Except, of course, if you're earning millions from your work or business. However, that wouldn't be possible if you're watching this video right now. A reasonable savings rate for most people with a steady income is between 25 and 40%. While the suggested saving rate is a good place to begin when establishing a savings habit, it isn't realistic for the long term. Cut down on spending to increase your savings. Put the money you would normally spend on a monthly Netflix subscription into an account that earns more interest. Avoid the habit of saving what is left of your income after you spend it on unnecessary things. And don't let yourself be tempted by the good things that don't last. Number 7. Good credit score. Many individuals think credit cards are a terrible investment. If you find yourself overspending often, a credit card is not the best financial decision. This is why so many individuals get into debt and many of us are afraid to have credit cards. The value of a high credit score and a spotless credit history is often overlooked. One of the most crucial aspects of your financial well-being is your credit score, which largely affects your future financial standing. With a good score, it's much less of a hassle to buy a house, receive a business loan, and accomplish other long-term goals. This type of practical knowledge should be addressed more in school. It's become impossible to ignore the importance of credit. Healthy credit history and score are essential in today's world, so everyone should be aware of how it works. Just take note to never miss a payment so you won't get into a huge debt. Number 6. Importance of insurance. We have already mentioned the importance of being insured. Those who rely on your income should be a strong motivator to invest in life insurance. Your siblings, spouse, or parents might fall into this category. You can save money by canceling your insurance coverage if you're not responsible for supporting anybody. Buying life insurance is like fixing a leak in your roof. The longer you wait, the more expensive it gets. So if you're planning to get one, make sure not to rush paying it as it may be a disadvantage. You should insure not just your life but also your car, home, and valuables you may have that can be covered by insurance. A good insurance investment is umbrella insurance, which provides protection beyond the scope of individual policies and often comes with premium savings if purchased from the same provider. This can be a good start if you are willing to go forward to be financially secure. However, you should still do your own research on different life insurances available and compare prices and services offered by many insurers before settling on one. It's your life, so you should choose the life insurance that best fits you. Number 5. Investing in your own home. There is no place more comfortable than at home. Everyone desires their own home, I'm sure of it. A genuine house that you can call home forever, not an apartment. However, some of us are afraid to purchase a house considering our fear of not being able to pay for it. To most of us, it seemed like a given that you needed a deposit equal to at least 20% of a home's total price to be able to make a purchase. Paying for private mortgage insurance is essential. The school didn't educate us that although bigger mortgage payments may be difficult, the benefit between paying extra now and waiting to save up the 20% down might be desirable. This is the sole reason why many of us are afraid to invest in real estate. Looking at the big picture of the economy over the last few years, we can see that real estate prices have risen dramatically while wages have stayed relatively unchanged. Since the value of a property would rise dramatically over time, it would be unwise to begin saving up 20% of the sales price right now. Instead, you should think about buying a property right now where the price is still justifiable. The guiding principle in real estate investment is that you shouldn't do it until you can save that much money in a reasonably short amount of time. If it takes you longer to get there, though, you will be pursuing an ever-evolving objective as costs rise. You shouldn't take more of what you can consume. Think carefully when investing in your own home. Number 4. Emergency savings. Have you ever been in a situation where you needed money desperately? Perhaps a member of your family became ill and required medical care, requiring hospital expenses. But no matter how you shake your wallet, you just can't find the cash you need to settle the bill. It must be stressful for you. An emergency fund is something your school may have left you unaware of. The vast majority of individuals do not have access to sufficient cash to sustain a financial crisis. This reflects the widespread failure to recognize the need of establishing emergency savings. They don't plan ahead for the what-ifs in life when you need money urgently. Maybe you have secure work that pays well enough that you don't have to worry about budgeting or saving money right now. What if, however, they decide to terminate you without warning? If the firm you work for suddenly went bankrupt, what would you do? Always keep in mind that the only thing that is certain is uncertainty, so prepare for the future with caution. The general rule of thumb is to set aside enough money to cover your living expenses for 6 months, although it's preferable to save more if you're able to do so. Number 3. Benefits of compounding interest. A few of you probably have no idea what compound interest is. It's possible that the incredible potential of compound interest is the greatest secret of all. Getting interest on your interest is what we call compound interest, and it's a pretty sweet deal if you ask us. The youth of today have an edge when it comes to investing, since they can learn the ropes at a young age if they're motivated to do so. They would benefit from learning about compound interest in the future. Even if they start with a very little sum of money, that sum may quickly grow as a result of compounding interest. If you're in your 30s and haven't yet mastered the art of compound interest, don't lose hope. You can still do it. This is a once-in-a-lifetime chance to increase your financial stability, and you should grab onto it immediately. Number 2. Taxation. Unfortunately, taxation is one of the most crucial subjects that students are not taught in school. You may be somewhat familiar with the concept, but unless you studied economics in college, you probably don't understand how it works. Because taxes include such a wide range of subjects, they are seldom covered in school. Knowing their internal workings is crucial for staying on the right side of the law. Discover what percentage of your earnings will be taxed and how much will remain for you when you start receiving your salary. You may use this information to figure out what kind of pricing plan will work best for your goods or services and whether or not an employment contract will provide your financial demands. There is a lot of inaccurate and poor advice that you may encounter, so it's best to get into the practice of doing your own tax statements. Read and understand more about taxation so no one can fool you when it comes to it. Number 1. Prioritizing your health. We don't always feel great in terms of health. Everybody gets sick or hurt sometimes and needs medical attention at a hospital. Unfortunately, due to rising healthcare costs, many individuals avoid going to the hospital even if they feel ill. It's possible that you'll need to borrow money from family and friends in order to cover your medical expenses, putting an undue financial strain on them. Having health insurance or emergency funds is crucial for this reason. However, you can avoid spending money on hospital bills by prioritizing the health of your family and yours. You may improve your health by following a healthy lifestyle that includes eating well, regular exercise, and the avoidance of unhealthy habits. You need not worry about the time or energy it will take to go to the gym or purchase more fruits. Taking care of oneself is an investment that will yield in the long run. That's it for this video. If you enjoy this content, please press the thumbs up button. You can also leave comments to let us know your suggestions and thoughts. See you next time!